Hello, everyone, and thank you for joining us today for this much anticipated panel discussion. As silver smashed through $35, many believe we may be on the cusp of a parabolic move in both the commodity price and related stocks. Today, I'm joined by Kit Mars, CEO of Alaska Silver, Sean Kuhn, President and CEO at Dolly Varden Silver, David Stein, President and CEO at Kuya Silver, and Jose Garcia, President and CEO of SilverX Mining. Gentlemen, thank you for joining us today. Before we get started, just a reminder that this event is being recorded and will be made available for replay shortly after we conclude. Also, if you have any questions, please feel free to submit them in the chat box. We'll only be addressing questions relevant to the topic at hand, but any client-specific questions will be happily passed along to the appropriate companies by my team. With that said, I'd love to start by getting everyone's opinion on what were the primary catalysts that finally pushed silver through the $35 resistance level, and how does this breakout differ from previous attempts? And I'll just start from my screen left to right, and we'll start with you, Kit.
Okay. Well, it's been a long time coming. I think all of us have been anticipating this event for a few years. So I think there's just a whole confluence of things that have happened. Silver is different from gold, obviously, because it's both an industrial and a precious metal. And so the industrial uses, and I think everybody knows that solar has become one of the largest components of silver demand and consumption. That continues to rise. And then gold prices have been very strong, which we all know. That's finally seems to be pulling silver along. And then I do follow Jeffrey Christian at CPM Group, excellent silver and gold research. And he's got a myriad of tables. I won't go through all of those, but looking at ETFs people are finally putting money into silver ETFs. And then sort of interesting, he also shows there's been a decline in the purchase of silver coins and small bars and things. So there's a number of things going on, but I'd like to hear what my other friends on the panel have to say.
Yeah, definitely. David, anything to follow up on?
Yeah, look, I kind of don't think this is that big of a deal in the sense that really we're still pretty early in this bull market for silver. And really what we should see happen over the next few years is silver should ultimately top out, way higher than it is right now. Now whether that's 70, 80, $100 an ounce, that I believe it'll be in that range. And that's partly based on how much gold's already moved. I think in this bull market, gold will continue to move, but maybe not as much. So silver will take over leadership at some point. I've done quite a lot of work on the historical relationship between gold and silver. And while Kit is right, silver does have a lot more industrial usage than gold does. They are still very, very highly correlated, and that relationship seems to hold over long periods of time. I'm talking decades. And every so often we have one of these precious metals bull markets where silver will usually outperform gold by 50 to 100%. So if gold goes up by 100%, you'd expect silver to go up by 150 or to 200% off of the low point, whatever that is. And then but the timing does differ. So usually gold will lead for a few years, and then silver will lead in the sort of the second half of the rally. And so I don't think we're not even at that halfway point yet, in my mind. And I think while it's great that we've had this little rally. I mean, it went from 32 to 36 very fast. Mm-hmm. There's some there's some micro reasons I think why that could have happened. But, again, I think this is going to pale in comparison to what we're looking at over the next, let's say, 2 to 3 to 5 years.
Sean, I'd love to hear your thoughts on it going from 32 to 36 so fast.
Yeah, look, I think of four things, but three of them have been present for a while now. The supply deficit, industrial demand, You got the macroeconomic tailwinds of what governments are doing, but I think the fourth factor it's the momentum factor, and silver's now got price momentum, and I think we're in this world, and we've been in it for at least 15 years, where it's whether it's the quants or the algos that are piling onto this trade. I think have sent silver soaring. But to David's point, I think we're like a 90-to-1 silver to gold ratio. So this is, I'd say we're still in like sub-basement territory here in terms of where we are for this move. But all those factors that have driven silver from $15, $16 an ounce, where it was a few years ago, are all there, and the only one factor that I see is different is this momentum factor.
And Jose?
I agree with everything that's been said. It's surprising to see this ratio to 90-to-1, right? But I think we need to understand also that silver, beyond the industrial usage of it, which is very exciting because we all know that there's a shortage in supplies, is a financial asset. And I think that's actually being realized now. If you look at what's happened with silver the last few weeks, well, that's what I hear from experts, because I am not, is actually there's a lot of buying of ETFs, more than actually physical silver, or let's say coins, as Kit said in the beginning. And I think that might change soon, and that's actually what will probably push silver even higher. I agree with David. I think seeing silver not at $49, $50 as we saw it in April 2011, but being maybe 75, 80 to 100 is probably something that we'll see. Not sure in 2025, but why not having a good silver market for a number of years?
In reverse order, here we get to the exciting question. So Jose first. From a technical analysis perspective, what is the next key resistant level investors should watch for silver, and how high do you think silver could realistically go in this cycle? What's your upside target?
Well, it's hard to say, and I don't want to fall in the terrain of speculation, but obviously, if you think of silver narrowing the gap with gold to basically 50 or 60, why not seeing silver at $60, right? I think that could happen in 2025, okay? Why not having silver at $40 this month if we continue to have this momentum? But again, I don't have that answer, to be honest. And my predicament as a producer is to make sure I make money at $25 silver, not 70, but obviously these are huge leverage for us if silver continues this trend.
And Sean?
And Cal, just to reiterate the question, you want to know the next level of resistance for silver?
Yeah, and then you could have some fun and price target, whether this year, 3 years out, whatever, just what's going on in your head.
Okay. So look, like Jose said, like I'm not an expert on I'm not a technician, I'm not a quant, but I had the pleasure of taking in a presentation a couple of weeks ago in London, where Raymond James had put on a silver conference, and they do have a quant on staff. And he talked about, and this is before silver had broke through 35, and he had talked about if it could go through 36, the next level of resistance is $40. And markets tend to go to these round numbers, and so I think that's a logical next level of resistance. In terms of like longer term outlooks, and I think Rick Rule says it best. I'll be out of the gold and silver trade when governments start balancing their budgets. And until then, I don't even want to put a price target on where I think any of this stuff can go, because, look, when I started in the industry 22 years ago, the gold price was around $300 an ounce. And I remember thinking, based on everything that was occurring at that time, and this might sound absurd, but I thought back in 2004, on a spike high, gold could get up to the high 8,000s. I really believed fundamentally we'd live in a world where it would average around $3,500 an ounce. However, that was before the pandemic and the pandemic printing. It was before deficits were measured in the trillions. And so I'm going to just hold off on any future price targets until I understand what we're measuring, the price of silver in. So I think we could see levels that might sound absurd today, but just looking at the price of gold at, call it 3,300, and then factoring in historic silver to gold ratios, having the price above 100 seems very reasonable.
And David, you mentioned 80 to 100, but care to elaborate and put further context to your statements?
Yeah, sure. The $80 target comes from basically gold going to 4,000 and then a 50 to 1 gold silver ratio. So, again, in my work that I've done on the gold silver ratio, I think, the people who are skeptics will say that there's nothing fundamental about it. It could be 2,000, it can be 2. Like there's no meaning to it. But what you do find is that the gold silver ratio is really excellent at measuring the essentially the market's bullishness or bearishness about precious metals. So as people get more and more excited, the ratio goes down. And the reason is because essentially silver outperforms gold. And why it outperforms gold is because it's a smaller market. So when dollars move into silver, they will move the price more percentage-wise than those same dollars would affect the gold market. The gold market's roughly 10 times the size of the silver market in terms of annual sales. And the actual ratio of the metals in the Earth's crust is about 8 to 1. So anything above 8 to 10 to 1, is potentially, you could argue, is undervalued for silver. And but again, even if you say, well, gold's got this important central bank monetary element that silver doesn't have. We'll see. I think you may see some central banks buying silver, not yet, but you may see that in the future. Again, going back to what Sean was saying with devaluation of currencies and all the money printing, it may not be enough just to own gold, right? Countries may need to hold silver both for strategic and for monetary reasons. But anyway, I'm jumping around, but that's where the $80 comes from, is from that kind of a price target. Obviously, it could go much higher in a spike, and that just assumes sort of a plain vanilla precious metals bull market. Okay. Now, if we go into something where there's more of a crisis, then it could go much higher than that. I'm just talking about where it should go if the world isn't coming to an end.
Thank you, David. Kit, do you care to share your opinion on the price of silver?
Yeah. Well, first of all, I'm with Sean. I'm not a technical analyst. They're fun to look at sometimes and watch the markets, but I have listened to several, and of course the $35 level was talked about for quite a bit, and so we've gone through there. I think Jeffrey Christian is looking at high 38s as sort of the next threshold to go through. $50 silver would be great. I just like the way the market has been working, where it's been slow and working its way up. Parabolic move is not something I would like to see, because that's they can come down like they go up. I think the biggest change is really the gold market and the central bank purchasing of gold, and really the realization of what the U.S. debt really is, which is becoming, when the U.S. crossed the threshold of paying more in interest than for defense, which is really remarkable. That's a long-term thing that needs to be corrected. But you see the strong central bank buying of gold, that probably is not going to change as the de-dollarization effect. And then silver will follow along with that. And then, of course, the industrial uses. So $50 silver would be great. High 40s would be fine. But again, I think most of us believe in quality ounces and not the quantity of ounces. So I'd like to see good economics at $20 or $25 silver, and then it's all gravy after that.
Very fair. This one we won't go in a carousel here, just open for everyone. Maybe I'll start with Sean because I liked his response regarding the pandemic spending. But how are current macroeconomic factors or industrial demand supporting silver's bullish momentum compared to previous cycles? So I'll let Sean kick it off and then open the floor to everyone else.
Yeah, I'll keep it brief. If you go back 100 years, industry consumed about 10% of the silver market. It's closer to 50% now. And so in this next market, what's exciting is, investors have been turning to silver as money for thousands of years. As investors turn back to silver as a hedge against inflation, as a risk, for systemic risk, as a hedge against systemic risk, they're going to be competing with industry. And I think that's the biggest fundamental difference this time. And I think that's why this next bull market is going to be different. And it's based on industrial demand.
Anyone else care to share their thoughts?
Yeah. The Hecla put out a couple of years ago one of their corporate presentations and really that was when they were really seeing the increase in solar demand for silver. That's not going to change. It'll go up and down. Right now, I guess there's been an overproduction of solar cells that are still in warehouses around the world, but that's going to grow, and silver is really a great conductor, much better than copper. You're not going to see silver wires strung between transmission lines, but it's the use in electronics and in solar cells is very true, and it's a very strong, steady market now. And gold, going back to gold a little bit, there's been a lot of discussion in the U.S. market, the amount of gold in most portfolios I think is around 1%, and which is very low compared with other countries. So the U.S. is such a big market. As that sentiment changes, and I think is changing, then that will also and has spilled over into silver, and that'll be the fundamental strengths, I think. And chaos in government is going to be with us for a while, so there's no turning that around, and that will also has been an effect, people looking more at precious metals.
Yeah. I think, Kyle, that the industrial use of silver will continue to grow. That's clear. But as Sean said, what will really change this is when people start buying physical silver, okay, to hedge against inflation, whatever. There is a lot of physical silver in the market, and as I said earlier, it seems not to be bought as compared to ETFs, but that's gonna change at some point. And going back to the beginning of the conversation, then the printing of money is not gonna stop anytime soon. The fiscal imbalances will not stop. So I think we're probably exposed to a longer cycle than previous cycles, because when you look at previous cycles of silver back in 2011, it was just basically a spike. But now might have a bit longer of a cycle, like 2, 3, 4, 5 years. Why not? Because we're talking about gold at 3,500, but who is telling you that gold doesn't go to 4,000 or 5,000, right? Think about that scenario. And I think that the physical buying of silver will be the game changer here, and that's about to happen.
Yeah, certainly. I'll kick off the next question for you, David. How have junior silver mining companies responded to this price breakout, and which types of junior explorers, developers, or producers are positioned to benefit the most?
The whole market was having a pretty nice rally up until October of last year, and then there was an election, and we saw a big downdraft in all the stocks, all the silver stocks for the most part. And only now are you kind of seeing, so it took pretty much 6 months, but we're now seeing some of these companies getting back to where they were. And, I would say like every other market, the larger companies tend to lead the cycle, and they get the lower risk money first, because, if you're new into a sector, you want to buy something that you can turn around and sell tomorrow, because you're not really sure. You want to be able to change your mind. So money tends to go into the bigger stocks first. And then as people get more comfortable, more bullish, it starts trickling down into the smaller and smaller companies. Haven't seen, and I think, I follow a pretty broad group of silver miners and explorers, and that's what I'm seeing. The other cool thing that's very interesting in our little subsector has been the M&A activity. So we've had three big high profile M&A deals in the last 6 months. Coeur took over Silvercrest, First Majestic took over Gatos, and then the most recent one is Pan American taking over Mag Silver. So all three of those were producing companies. All three of those were cash flow positive. So they were all bigger producers. All three of them happen to be in Mexico. But that's probably because most of the producers are in Mexico, frankly. Most of the public companies that produce silver are in Mexico. So I honestly wouldn't read anything into that. But yeah, anyways, but it's been good. It's interesting because it means there's actually fewer places for people to play, especially on the larger cap end. And so I think you're seeing companies like that are more in the mid tier in the hundreds of millions, like Dolly Varden, for example. We'll get some of that, and then we'll see some of that money coming into smaller companies like Kuya very soon, if not already.
Definitely. Sean, what are your thoughts on how the silver juniors responded to the recent price breakout?
So I've got a page on where I follow my stocks, where it's a dedicated silver page, and I was just kind of scanning, and it's got companies that are micro caps, it's got companies that are your big producers, and I was just kind of scanning the list, and I was looking at the producers, and they're all trading very, very close to or at 52-week highs, the producer category. And then if you go into some of the and really, I'm surprised actually my list is this long, because I was convinced there was only 10 primary silver producers, but I've got a longer list here. So the large producers are trading at 52-week highs. They're getting that bump. And to David's point, though, there's two pre-producers, Vizsla and Abra, that are also kind of moving up to that 52-week high. And then the rest of the basket, we're kind of in the middle between our high and our low for the year. So I think the juniors are lagging, which is totally normal and natural. But to David's point, the larger the market cap, the more advanced the company, the closer to the higher end of that range. And so, typical what you see in these markets, where you've got your royalty companies, your senior producers that are the first to move, and then your unfunded developers and your advanced explorer category lagging.
And Jose, I would love your opinion. You're the only silver producer on this panel today.
Oh, we're a silver producer too. Thank you.
Oh, apologies.
It's okay. It's new. We're very new.
Yeah.
We are both in Peru, by the way.
Yeah.
No, I agree with what has been said. I think obviously we feel as a junior that we are lagging behind. I agree with David that money goes to the big producers first, and will start flowing towards us. We've seen an anomaly, which is an increase in volume. So I can see larger groups, let's say funds or hedge funds, taking positions in smaller companies like SilverX, and that's happened over the last just 3-4 weeks. So that's a good indicator, I believe. So I'm really looking forward to it, because not only because as a producer, we think there's a huge leverage for us, right? We have a big resource, small production, there's a ton of upside, but really what we need is a bit of that activity, money coming from, let's say, not investment in the majors, but investment in the producers. I think that's the great thing happening for us in the next few months, really.
And Kit, do you have any further commentary before we move on?
Covered most of it already. I think the takeover of Mag Silver was very important. Mag really turned into an excellent deposit, discovered by Dr. Peter McGaugh. And that really showed the value there. It's interesting. When you look at it, it's a cash and share transaction. Pan American went down the next couple of days, just like as normal. But boy, both the stocks have gone up since then and are trading much higher. The thing I've been following Core and Hecla from my work in Alaska, et cetera, for many, many years, and just like to point out that Hecla still has a ways to go to get back to the share price that they were 10, 15 years ago. Core is getting there. They're getting pretty close. But if you look at the leverage those producers have, Core came out with their earnings first quarter, and it was up 10 times from the previous year. Now, they have a lot of things going on, new projects that are finally becoming cash flow positive. But those companies still have a ways to go to get back to where they were years ago. So I think that shows you're still in the early to mid stages of a market run. And then the juniors are, sadly to say, the last ones, but they also have quite a bit of leverage. Most people on the panel here aren't at their all-time highs, so that's something that we look forward to and getting back to that. So that'll be a good sign that the market has finally turned our way.
And sticking with you, Kit, we'll move on to this next question here. What specific criteria should investors use when evaluating junior silver companies? There's not many out there. So what should people be looking at, and what potential red flags should they avoid?
Well, we like to talk about high grade. So I think grade is very, very important because it gives you a lot of protection, downside protection from pricing cycles. So, look at the quality of a resource that a company puts out and go ahead and if you want to be serious, you need to dive in and actually read those documents, take a look at it. We are silver, but also polymetallic. So that is a little bit of a buffer. And so those, I think jurisdiction, Mexico is mentioned. I used to work in Mexico. It's a wonderful country. Laws keep changing there, and taxation is probably, you're not going to see some of the takeovers that we saw 100 years ago, but taxation is becoming a big factor. But investing in some parts of Africa is pretty risky right now. So I think looking at the Western Hemisphere, North America, Central America, South America, where you have great deposits and stable governments for the most part.
And I'll open it to the floor for anyone that wants to contribute. Red flags or what you look for in a silver junior company.
I'll jump in and just, I started my career as an equity analyst covering gold mining companies and covering actually a lot of the silver companies that are, some of which are still around today. And, the thing that I always found was a winner, especially in a bull market, was to have kind of a GARP, growth at reasonable price kind of structure to a company. So, I find I'm more of I guess, personally a value investor, and I've had more success with that. And you can kind of look at, mining companies and juniors the same way. There's always like the flashy one the sexy one kind of thing within any group, but usually those are overvalued. And, if you don't trade them right, you get burned. Mm-hmm. Something like, like the way we've set up our company, we're just started production, we're ramping up our mines so that we have cash flow. And then really where the growth is going to come from with Kuya is going to be from, exploration, being able to drill with our own cash and expand our resources, because we know where to drill. We haven't it yet. We just need time and money, and we'll get there. And we could probably, have huge resource increases over the next several years. And then as we do that, then that allows us to now look at increasing production. So you get growth from resource growth, that you get growth from production. If you can do both at the same time, that's like the magic formula that That's how stocks, again, going back to my gold and silver days in the early 2000s, I covered some stocks that went up 20x, 50x, and they usually had that combination of exploration and production growth going simultaneously. So we're really trying to set that up with Kuya, and I think if you get it right, it can be just a huge winner for everyone.
Yeah. I agree with you, Kyle. I agree with David. I think you want to look for a quality resource. Okay. You want to look for companies that are able to grow resources over time. I mean, just perhaps making a mention on SilverX, but I think we've grown our resource by 4 times since going public, which is 4 years. You want to look for a management team that is able and capable to execute, right? Especially if you are a producer, which is not easy. And in terms of jurisdictions, obviously, you want to be in a jurisdiction where it is not complicated to build a mine. And I think, for instance, Peru is one of those. Now, I wanted to talk a little bit about Peru because we've said a lot about Mexico is the largest producer of silver. Peru is the second largest. And obviously, many of the silver projects that we see in the public markets and will continue to see coming up are in those 2 countries, of course, other than Canada as well, the United States, Chile and Poland as a byproduct. But reality is that you're going to see a lot of Peruvian projects coming up. I just wanted to highlight some news because other than the 3 big M&A moves we saw recently in Mexico, there was a relatively large or medium-sized producer, which is Endeavor Silver, coming into Peru the other day, just a couple of months ago. And we basically share our district because we are operating at one of these massive vein systems, a epithermal system in Huachocolpa in central Peru. And we own basically half of it. And there was a private company owning the other half. Basically, our concessions, our tenements are literally overlapping. And Endeavor Silver paid a good price for that company. They paid basically 5 times our market cap with a similar resource. They are more invested, more developed in terms of capacity, 3 times the capacity. But at the end of the day, you buy the resource and the potential. And that was great news for us, for both as a company and also as a country, because that interest is now switching to Peru again. And I think that David and I are going to benefit from that because we both are in central Peru, indeed. I think we're going to see that happening this year as well.
I'm glad you mentioned that, Jose. That's another very interesting deal. Yeah, for sure.
Sean, do you have any comments on red flags or what to look for in a silver junior?
Look, I think I need to understand the investor, in terms of what their goals are and what they're hoping to achieve. And, you really have to know yourself. And so probably the safest thing is just go buy the SILJ and it'll give you great exposure to a basket of companies. It just depends what you're trying to achieve. And it depends on if you believe what we're talking about on where silver could go. I've seen in previous bull markets, it's the projects that are some of the most challenging, some of the projects that have the lowest grades, that have the highest costs, that are in the worst jurisdictions. Those are the companies that are going to perform the best in a rising bull market. But again, that's not every investor has the stomach for that. I definitely don't. I've always stuck pretty close to home, high grade, keep it simple, be in places that you're wanted. So I think it really depends on what you as an investor can stomach and what you're hoping to achieve.
Thank you. I want to learn more about the men behind the companies now. Like silver bugs have been frustrated for years watching this metal underperform expectations. So you must have experienced that frustration frequently with the underlying commodity for some time. What made you decide to commit to building businesses in the silver market despite those challenges? And we'll start off with Kit.
Well, it's not often a direct choice. And in our instance, we were working around the Illinois Creek past producing gold mine, which is gold and silver, quite a large silver component, and sort of what we call the rediscovery of our Water Pump Creek deposit. But some of those first drill holes just returned some spectacular intervals of over a kilo of silver, plus the lead and the zinc. So the grade is really what moved us ahead, that said this is something we want to focus on and build a company around. because the grade is very significant and it really offers you all that protection. And the other thing is, in being in Alaska, the political climate is changed, is very good. Alaska's always been a pro mining state, starting from the days of the Kennecott copper deposit over 100 years ago. And just last week, there was a energy conference in Anchorage. Most of the focus, a lot of it was on the proposed Alaska natural gas pipeline. But what was very significant is 3 cabinet-level secretaries from D.C. were participated and stayed for multiple days. And it really is turning the focus on streamlining permitting in the U.S. that has been difficult in many states in the past. That, I think, is changing. And so the attitude towards mining is improving quite a bit, and that is going to carry over into more streamlined permitting. So that goes back to the jurisdiction we talked about before. And so jurisdiction and grade, I think, are what pushes us forward on the projects that we have now.
And David, what got you into the silver industry?
Yeah, so in my early career, I was really focused on precious metals, and so it was gold and silver, and geologically they're closely related as well as financially. So I did quite a bit with silver mining companies in the early 2000s. Hecla, Coeur, Pan American, First Majestic when they only had one mine, Fortuna when they had just their mine in Peru. And these companies have become much bigger with different mines, and most of them actually have veered in more towards gold, and then some of them are veering back towards silver now. But yeah, so I've watched this industry, for 20 plus years, 25 years, and so when I did kind of stumble across the Bethania deposit looking for somewhere to invest my own money, I felt quite comfortable with what I was seeing, because I feel like I know the precious metals and in the silver space very, very well, because I've been doing it my whole career. So when I feel like I can identify a diamond in the rough, a huge opportunity when I see one, and I saw that with Bethania. So that's where that's kind of how we started. Was I put my own money in. I did a deal with the former owners, and then 3-4 years later we became a public company. So
thank you for sharing. Sean, why silver?
So it's funny. David was actually a mining analyst he was covering a gold company that I helped build in the 2000s. He was the first analyst that picked us up, and I think he picked us up at a $10 or $20 million market cap, and we went on to getting up to about $1.4 billion valuation. And I personally had made more money speculating in silver stocks in 6 months than I did building a gold mining company in 6 years. So for me, the lesson was, the next time I thought we were going to come into a precious metals bull market, I need to have a stronger weighting towards silver. And it's why in February 2020, I came on as the CEO of Dolly Varden. It was a couple of high-grade past-producing mines, safe jurisdiction, and company had a $20 million valuation 5 years ago. We've grown since. And so the idea was silver's going to outperform gold, but you got to be there early. And that was the motivation, is my experience during the last precious metals bull market.
Interesting. And Jose?
Well, other than being troublemakers like most miners, it was 2017, 2018, and silver was what, $13, $14, something in that range. We really got into silver because we saw the opportunity to build again, or to rebuild a historical mining district, and to actually build a very relevant silver play. That's how we thought. Honestly, at the time, we thought it would take shorter to actually reach this level of $33, $35. Okay, so we've been under the water for a number of years, but we really saw that opportunity because, for a number of reasons, geographical, political, financial reasons, you still find these old historic districts that have been overlooked for decades. We're talking about Silver X, Kuya, Alaska Minerals, and obviously Dolly Bottom. It's the same case for the four of us, right? So those deposits have been dormant for a long time, and that's the opportunity. Again, it took a bit of maybe too long, but we're happy to be here after 7 years.
I'll leave this next question open to the group. I know I like what Kit had to say about maybe the price running too hard, too fast, but what are the biggest risks that could derail silver's current momentum, and how should investors position themselves to protect against the potential downside?
Well, my biggest fear is that the futures market just catches on fire and goes too quickly. Futures, people that invest in futures, the leverage is phenomenal. Sometimes it's a 10% cash. So there's a lot of volatility there. I just like to see the industrial demand continue and be steady, and look at the spot prices and a nice gradual increase. It doesn't always work that way. But so what I guess what I worry about is a super spike that is short-lived, and that can create some damage in the investor sentiment market. So slow and nice and easy, I guess, is what I would like to see.
Anyone else?
I think for me, what scared me about being early in the silver market, considering where we are globally with debt levels and all of the risks that are out there, is historically, if you get into a recession or heaven forbid a depression, silver isn't going to perform well. It'll perform really well coming out of one, but if we're going into one, silver is it's going to perform more like copper than gold. And a risk is U.S. dollar strength. That's a risk. I'm not worried about that risk today because the dollar seems to be weakening. But to Kit's point, big moves up are followed by sharp corrections. That's a risk. And then I think a risk that I observed, I've studied risks, but one that I observed in April of 2011, the last time the silver price ran up to close to a record high there, I think it got up to 49 and change. There was some regulations that came in that curbed the momentum. If you think about where most trading occurs, Jose talked about, physical demand. I totally agree with him. But what I'm seeing is most of the trading happens in the digital market, or what's referred to as the paper market. And what had occurred was, and Kit had mentioned this a little bit earlier about the leverage. So the margin requirements on COMEX were raised 4 times in a 24-hour period in April of 2011. And so that's what took the air out. So another risk is regulatory and policy change.
So I think we covered everything here today. So I really wanted us to have the opportunity to talk about, with the limited selection of quality silver plays available, why should investors consider your company? What are your main takeaways for 2025 and beyond? We'll start with you, Jose.
Well, excellent. We are SilverX. It's a Peruvian company. We've been listed since 2021. We are growing a very large, high quality resource, and we are a producer. We are producing north of 1 million ounces of silver a year, but we have plans now to actually grow beyond 7 million ounces of silver with the resource we've got. So if you want to look at SilverX, especially as a producer, you are going to continue to see a good resource coming up every few months. But more importantly, over the next few years, going to see production growth. We want to become a mid-tier company. Again, from this small production, actually going to take it at least 4 or 5 times. And we are now working heavily on that. So I think that's going to be the great news you are going to see regarding SilverX in the next few months.
Thank you. And Kit?
Well, we have our deposit, Water Pump Creek, is what's called a carbonate replacement deposit. And it's really become in the vogue with the help of Peter McGaw, who's a good friend of mine and been a close advisor for the last 4 or 5 years. So those tend to be big systems. We have a very nice high grade resource at one end of that. Our past producing gold mine is really just an oxidized portion of a gold-rich, copper-rich part of a carbon replacement. But we have about 8 kilometers in between that we're just starting to explore. So scale is very important. And once you find these deposits, they tend to last for many, many years. And of course, the classic is Santa Eulalia, where Peter McGaw did his PhD dissertation, and that was mine for 300 years. So those are the kind of things that give us a lot of downside protection. And we just need to increase our drill rate so we can have the budgets that Sean Kukin has, and he's a little bit ahead of us in his drill production. We'd like to get that up and really expand the resource. So, and that is something that I see with the market the way it is now that should enable companies like ours and others to really up their exploration efforts and move the resources ahead quicker.
Thank you, Kit. And David, why should people consider Kuya Silver?
Yeah, so we are a silver producer just starting up in Peru. We just so there's some similarities with us and SilverX for sure. Going back 3-4 years ago, we've been in a pretty bearish market. That's the reality. In terms of the silver equities especially, it's been a really, really tough market for a number of years. So we had to make that decision several years ago about whether to focus on exploration and drill, which we could have done, but we decided to restart production and be a little bit different. There are very few primary silver producers out there, 3 of which have just been taken over in the last few months. So there's 3 fewer than there were. We do get 75 to 80% of our revenue from silver. So we are heavily weighted to silver, which again, doesn't seem to matter right now, but when the silver price gets really, really bullish, people will, I think, flock to Kuya to get more silver exposure. We've got, a big land package around the mine. We've done very, very little exploration over the last few years, but we do know where the veins are and where to drill. So as we start to build more cash flow at the mine, as we continue to ramp up towards the end of this year and into 2026, we'll start allocating more and more cash towards drilling. And then that should allow us to increase our resource, in a big way, where our historical discovery cost is 20 cents an ounce. So the next $20 million, let's say, that we can put into the ground over the next few years, should, if we continue with that kind of a discovery rate, that'll give us 100 million ounces. So let's obviously we can't guarantee that, but that's what we internally are looking to do, and that obviously would be just an absolute game changer in terms of our valuation. I mean, we're trading at almost close to 1 times cash flow in terms of what we expect to make as we ramp up to our initial production rate. In silver companies, the larger peers, they can trade at 10, 20, 30 times cash flow, depending on the market's perception on their growth and exploration potential. So I see massive upside. That's why I'm a big shareholder, and I have actually, invested more money in Kuya this year so far.
And Sean, why should people consider Dolly Varden Silver?
That's a good question. So when I started the journey at Dolly 5 years ago, we were a $20 million company. Today we're valued at $400 million. We announced financing this week. Once it's closed, we'll have about $55 million in cash. And as Kit pointed out, we are going into a very robust drill program where we currently have 4 rigs turning 24 hours a day. In terms of the why Dolly, this has been a business that we've built from 20 million to 400 million. And despite it being the difficult market that David has described, because of our shareholders, we've got these shareholders that have been super supportive, and we have not had to do a down round of financing. So we've been able to keep bringing money into the business, growing the business. And, my vision for the company 5 years ago was to try to increase the mineral inventory, to try to get as much high-grade silver. And so when we started, we had a couple past producing mines. We went on a process of listing the company on the NYSE American Exchange to increase liquidity, to really bring in the U.S. investor as we're moving into this next phase of the bull market. As we've seen volumes pick up, we've actually seen our share price move up quite dramatically over the last 45 days since listing. And we've leveraged that into making a series of acquisitions. So we've now gone from having 2 past producing mines just in the last 60 days to having 5, and to locking in a total now of 100,000 hectares of prospective ground in the Golden Triangle. And my real vision for the company is to take these high-grade deposits, our new discoveries, and to direct ship them into what is a very hungry mill, a 3,000 ton per day brand new mill that's currently on care and maintenance. And so that's the overarching vision, and the catalysts that are going to continue to build and grow this company are discoveries. But we've had a long series of accretive M&A transactions. So it's a company that's fully financed, it's liquid, it's got some great shareholders, it's got a high-grade resource in a safe jurisdiction.
Sounds very exciting for everyone's next few years here with the silver movement. I would like to thank you all for joining us today, and everyone in attendance. Just a reminder, this is being recorded, and our team will have the replay up here shortly. But gentlemen, thank you so much for your time.